The US Department of Treasury is increasing by at least double the size of liquidity support buyback operations for longer-dated nominal coupon securities, 10s to 20s sector and the 20 to 30-year sector. The current maximum size of $2 billion per operation will be at least $4 billion per operation. This change is effective September 9th. If you can bring up the bond board and show the reaction as I read through this. Treasury will provide more information about future buyback sizes at the next quarterly refunding scheduled for November 4th, 2026. This increase in buyback operation sizes reflects Treasury's desire to provide greater liquidity support in longer-dated nominal sectors where there is consistent, strong sponsorship from market participants, as evidenced by the significant volume of high-quality offers Treasury routinely receives in longer-dated buyback operations. The move at the long end off the back of this statement, Mike, is notable. You've got a move of 6 basis points on 10s, close to 6 basis points likewise on 30s. Mike, what's your reaction?
Well, the timing is certainly interesting for this announcement, given the way the bond market has been trading over the last week or so, because essentially they're pushing up rates again, which the president is very opposed to. And it makes it much more difficult for the government budgeters who are working up on Capitol Hill. The idea of the buybacks is they buy back old off-the-run securities that are not heavily traded anymore. And that puts more people into the current on the market securities, which then creates more demand for it, would raise the prices and then, in theory, lower yields. So we'll have to see how this all works out. The market had anticipated something like this, but the Treasury has been telling us at refunding that they weren't going to make any changes for quite some time. And now it looks like maybe they're being forced into it by the way the market's moving.
Mike, that feels like the first sense of blinking maybe at the Treasury, and maybe that's a little bit too strong, but the first step of corrective action to help put a lid on what's developing at the long end of the curve. Is that fair?
Yeah, that's fair. I think that's probably the idea behind it here. They haven't had scale in terms of buybacks in order to really move the markets, but this is the first sign that maybe they're moving in that direction.